I recently published a video talking about all of the variables that go into determining your mortgage interest rate. Well, now that we know all of that information, we should be able to quote you your rate, right? Well, yes, but it's important to know that it's not just one rate. You actually have a wide range of rates to choose from. We know what the pricing is going to be, but now we have to talk about which rate works best for you. We're a mortgage broker, so we have access to a number of different lenders, and what we do for all of our clients is we price your scenario out with each of our lenders to determine who can offer the best rates, fees, and service given your situation at the time. When I say you have a range of rates to choose from, I'd like to show you a pricing sheet from one of our top lenders so you can kind of get an idea of what I'm talking about. It's a $400,000 home purchase with 5% down using conventional financing. So the loan amount in this case is $380,000. You'll see that there's a wide range of rates available here. Realistically, the lowest viable rate is 4.5%, and we take that all the way up to 5.875%. You might be asking yourself, why wouldn't you just want to take on the lowest rate possible? Well, that's because the 4.5% rate is going to charge 2.6 points up front. 2.6 points represents 2.6% of the loan amount, expressed as a dollar amount that is $9,881. That's a fee that gets charged one time upfront at closing. It's going to give you the most favorable monthly payment of $1,925. This number represents principal and interest only. Numbers on this end over here on the right-hand side show mortgage insurance. We don't need to factor that in today for me to make my point. So keep this $1,925 payment in mind when we scroll to what's called the par rate. Today's par rate for this scenario is 5.334%. And by par rate, I mean you're not getting charged any points up front, but you're also not going to get any lender credits. If you take on the par rate, your principal and interest payment is going to be $2,118 per month. This is where I'm going to bust out my TI 84 Plus and do some number crunching. $2,118 minus the $1,925 payment you would get with the 4.5% rate is a difference of $193 per month. Now what I'm going to do is I'm going to take the points that you would have been charged for the 4.5% rate, $9,881, and I'm going to divide that by the $193 per month in savings. That's going to give you a calculation of 51. That represents 51 months it'll take for you to break even by buying these points. In other words, if you know that you're going to be in the loan for more than 51 months, then it's going to make sense to buy the rate down, or it can make sense for you to buy the rate down because every payment you're making beyond the 51st month is going to save you money in the end. What if we go the other way? What if money is tight and you need some help covering closing costs? We can do that too. Say you take on a higher rate of 5.75%. The points here is expressed as a negative number, minus 0.968. That's just another way of indicating that you're receiving a lender credit and not being charged points up front. In this case, the lender would pay $3,677 towards your closing costs. But that's, of course, going to result in a higher monthly payment of $2,217. So, what we do as mortgage professionals is we take into account your needs, wants, and goals. There's no one size fits all mortgage, and that's why we always express interest rates as a range. It's important for us as mortgage professionals to ask questions so that we have a feel for your situation and what options would work best for you. This is why we present options. I really hope that this pulled back the curtain a little bit and provided some transparency as to what we do on our side, what we see, and what we consider. It makes no difference to me whether you take the highest rate possible or the lowest rate possible. My compensation is based on how much money you borrow and not the interest rate that you take on. If you have any questions, I'd love to talk more about it. Hit me up, comment, call me, email me.